Hello, everyone, and welcome to Market Psychology 101, where we try to look for value in the markets when there's fear and to be cautious when there's greed. This channel is for the new, casual, low to medium risk level investor. We aren't going to get into trading. We do talk about ways to simplify your investing strategy. So if you already consult with your financial advisor, you put money into an IRA, and you have extra money to invest on your own, my goal is to educate and simplify in as much of a way as I can how you can maximize the value of your investments. That is my goal. I have a lot of knowledge, experience, and certification in the field of psychology. I've done consulting work, education. I want to use those skills I have where I have helped myself make good money and profits in stocks and crypto to help you look for certain signs and signals on how you can increase your value of investments. So in this video, what we are going to take a look at are some stocks, some important high value stocks, and their current prices because their earnings reports are coming out or have come out. Tesla's came out on Wednesday. Next Tuesday, these are Magnificent 7 stocks. We have Microsoft and Google. AMD is not a Mag 7 stock. It is a great stock, though. It's baby NVIDIA. NVIDIA's earnings reports aren't coming out yet, but we also have the other Magnificent 7 stocks of Apple, Amazon, and Meta. So a very important week coming up. We're going to take a look at these Mag 7 stocks along with AMD, where their price is, ways that you can increase the value of your investments. Where are we on fear and greed? Pi Investing has us in extreme greed, that's 75 or higher. And why wouldn't we be? Say, okay, extreme greed. Stocks, the NASDAQ, S&P, Dow, we're at all-time high territory. CNN, fear and greed, extreme greed. So first one we're going to start out with is Tesla. Here, again, S&P all-time high. We are in the overbought territory of the RSI, that's Relative Strength Index, and we are on the weekly. Let's look at Tesla. So earnings came out, had a negative impact on the stock, and this is where the sell-off happened. This is just a fib that I drew, that's this tool right here, from our last yearly low to high. I know there's stuff over here. We're about to move past it, so when I drew the fib from the low to high, just moving the range a little bit, a lot of the levels made more sense. Yes, there's this guy up here, and we didn't totally wick down here, whatever, it's okay. So we have hit this 786 level. If you like Tesla, if you use Tesla, and guys, I talk about this a lot, when I invest in the stocks, it has to be something I use and something I like. Because if I'm using a product and I like it, and then all of a sudden I start to not like it, because the company starts to suck and the product starts to suck, I'm no longer investing into that company, and I may look at dollar cost averaging, or at selling out of that investment if I have held it for a while when the opportunity arises. Not when it's oversold, but when there's greed in the markets and it's overbought. Okay, I'm willing to be patient for that. That is a great way to gain insider knowledge on a product or a company the way that Wall Street and politicians do. Use the product. Get to know more about the product, the company. Take a look at its earnings reports. How much extra cash do they have compared to their debts? How much revenue are they making? Something I've noted with Tesla is its market cap at times has been 20-ish, around 20 times higher than Ford. Ford has double the revenue of Tesla. Something that Tesla has done very well on their financial books is they have a lot of extra cash compared to their debts. Their revenue is solid. And again, overall, their books look great. So if you like Tesla, you believe in it, hey, maybe not the worst time to buy. But again, something to consider. Its market cap, it's still around like 12 to 15 times higher than Ford with half the revenue. Something to consider, completely different companies. So if you like Tesla, you use Tesla, maybe it's a time to consider buying and holding for the next 10 years. Let's throw on an indicator. There's UT bot alert on TradingView. On the weekly, it is not given a buy signal yet. We have a weekly sell signal that is played out to the tune of a 30% drop off. Hey, if this happened with Amazon, I would be dollar cost averaging in right now because we're within the yearly low range. I don't care if the price would go down by half, I'd be dollar cost averaging in more because it's a product I like, use, and believe in. So just something to consider. There's other indicators you can use. The UT bot alert tends to be more of a lagging indicator than the 1020 MA crossover with Heikin-Ashi signals. This one on the weekly, it was around the same time. It does give more buy and sell signals depending on how aggressive of a investor you want to be. So this one is not given a buy signal yet. That's on the daily. Sorry. Let's go to the weekly. Weekly, no reversal yet. I like to make my plays off the weekly and especially the monthly. If we get a monthly buy signal, I'm very excited. Overall, I'm very excited when it comes to stocks. As far as the RSI, let's take a look at the last year. Again, when you go to the last year, it's going to put us on the daily time frame. We are in the oversold territory. We've quadruple tapped it. And look at this. We're higher in price than where we were back here, but here when we were oversold, the price has been going down. So that's bearish overall. Is it possible we get down to this 150 range? Sure, it's possible. If this is a product I like and use, I would be considering it. Let's move on. Next Tuesday, Microsoft and Google and AMD. Let's go over those. Microsoft. So we're going to take a look at the last year. We're at a yearly high, I'm not investing. We're overbought, I'm not investing. If we take a look overall and zoom out, yes, we're at all-time highs, I'm not investing. This is where I say time in the market is more important than timing the market. I am willing to be patient. This is on the yearly. If we just go back, look at this. There has been times that you could have dollar cost averaged in where we were at yearly lows. And even if you go to the weekly and you look at the RSI, anytime we're under 50, tends to be a decent time to dollar cost average in. Here we touch 50. Decent time to dollar cost average in. Under 50, pretty good time to dollar cost average in. Google, we're still playing out a buy signal back here on the weekly. Weekly, we're overbought. Let's go take a look at the last year. We're at a yearly high, overbought. I'm willing to be patient. I love Google. I love Microsoft. This is not the time I'm buying. I am buying when we're under 50, not on the daily. Again, go to the weekly. When we're under 50 on the weekly, I'm willing to buy in. Now look at this. You could have bought in over here when we got under the 50, and look how much lower the price goes. So don't go exclusively off the RSI. You can wait for buy indicators. Now here we have a couple indicators showing buy, and we did go lower. I'm curious, what did UT bot alert say? It was saying buy up here. Look at that. You would have been holding. You would have been in the negative for a while. So, guys, this is the importance of dollar cost averaging and why I say if you are buying in, I kiss that money goodbye. I forget about it for 5 years minimum when it comes to stocks. I do not care about that money. It's extra money I can afford to lose and not have and forget about. And I am waiting at least 5 years, me personally. Because by then, let's take a look at another time that's happened where we had a weekly buy signal. This is going way back. Where we've had a weekly buy signal and it's gone a lot lower. Well, this is kind of the first time it's happening. Let's go to Microsoft because obviously Microsoft goes back further just to drive that point home. Okay, Microsoft, similar thing played out. I'm hoping some good data around the financial crisis time. Yeah, here's the financial crisis time. Buy signals up here. Now this one, we were above the 50 on the weekly RSI, so I wanted to buy it. But you could have bought here, and then had lower prices. But guys, here's what can happen when things tank. People feel sad, and they're like, my investment sucks. What am I doing? Why am I doing this? Those are the times you need to buy. You need to dynamically dollar cost average, which means put in more as we get lower. 20%, 30%, 40%, 50, 60% lower. You need to be putting in more because that is a stock you use and a stock you like. If it is a stock you use and like, you should be getting more and more excited the lower it gets because you believe in that company. You've checked its balance sheet. You know it has a strong financial moat, that its revenue's high, that its debts are low. Okay, these are times that you can create generational wealth down here. Just saying. So we looked at Google. Let's go to AMD, or baby NVIDIA, as I like to call it. That's on the daily. Let's remove this. So guys, you saw those two buy-sell indicators, just another tool for you to use with your technical analysis. Here, let's zoom out real quick. Okay, we're at an all-time high territory right now. We got back up to where it was before. Up here, we had the sell-off, came back up. So we're at all-time high. We're at a yearly high. We're overbought. I'm not buying. Great company, like the company. But if we move forward in time and things correct a little bit and it gets down into this 100 range, I like AMD. I would buy over there. Thursday, we have 3 of the Magnificent 7 stocks coming out. So Tuesday we have 2, Thursday we have 3. Apple, Amazon, and Meta. Apple, how about them apples? Something to know, guys, that let's take a look at the last year. Apple has a $3 trillion market cap. It's been the largest company, or this company has had the largest market cap of any stock in the world for a while. Microsoft just passed it by a little. So right now Microsoft is number 1, Apple's number 2. So great stocks. Again, this is on the daily. This is the last year. We're at dang near all-time highs. Okay, so I'm not buying. Now something to know is that the RSI is going down and the price is going up slightly. So that would be bearish divergence. Do you guys see what I'm talking about here? Let's draw this. If the strength is going down and the price is going up, we go off the RSI and say bearish divergence. That means we don't quite believe in this price action. If it's the opposite, it's bullish divergence. If the RSI is going up while the price is going down, that's bullish divergence. You can see that right here. So price was going down. Come on now. RSI going up, that is bullish divergence. And you can see what happened here. Okay, you guys, maybe you've heard about that before. That's how we look for it. That's why the RSI helps. If we go to the weekly, let's take a look at where Apple doesn't spend a lot of time under 50 on the weekly. But overall, those tend to be great times to buy if you're willing to hold and be a long-term investor. So on the yearly, we are having bearish divergence. I would be looking for Apple to possibly come back down here. Who knows? Maybe we'll get great opportunities to buy. Okay, what was the next one? Amazon. Love Amazon. I use Amazon. I like their products. Their delivery is great. Screw you, FedEx, for always losing things I order, especially when it comes to my animals' Chewy boxes. They get lost in a black hole somewhere at their warehouse. I digress. If you have a problem with FedEx, comment below, or just say FedEx sucks. Okay, there you go. If FedEx has a stock ticker, okay, I wouldn't be investing into their product because I don't like their product, even though I am forced to use it sometimes. I hate their service, so I would not invest in FedEx. Okay, simple. Last year, look at this. We're at highs. Are we at an all-time high? Not yet. We have yet to break an all-time high. That's around the 190 price. So over the last year, is there any divergence? Okay, RSI is still going up. Let's take a look over here. RSI is going down, price is going up. So here there is some bearish divergence. You guys see that? So RSI, now we don't know, crap, did not hit it. We don't know where this peak in the RSI is going yet. It may still go up higher, and it may just tell us that things are straight bullish. But let's say the RSI stops here and goes down. That would mean bearish divergence. If the RSI just continues up and it's level, then it's bullish divergence. Or it's not divergence, it's just straight bullish. Okay, that's a way for you to look at it. We'll see what happens. But Amazon, I love Amazon. I'm not buying right now. I will buy when it's at around yearly lows in that 20% of yearly low range. When on the weekly, this is a simple way to maximize your value. When on the weekly, we're below 50. When the indicators are showing me buy, okay, I'm okay with dollar cost averaging in progressively more as it gets lower in price, because I'm okay with not seeing that money for 5 years plus. Being patient, waiting it out. Let's take a look at Meta. Last one, Meta, because NVIDIA isn't coming out yet. So Meta, where are we at? We are at all-time high for Meta, and Meta has a 1 trillion market cap. Again, with market cap, if you put in $1,000 into Meta stock and you want it to be $2,000, that means you want the market cap of Meta to go from 1 to 2 trillion. Same with Microsoft and Apple. If you put in $1,000 in Microsoft or Apple, who have 3 trillion market caps, you want their market cap to get to 6 trillion, which is obviously a lot farther way to go, but maybe it can get there. Let's take a look at where it is on the weekly. Here's when the price was dipping, when on the weekly we were under 50 or oversold. Look at this. When we were very oversold, this is a great time to buy. We were double, triple tapping it. I did get in on some Meta in this area because we triple tapped the oversold, and yeah, it was very bad down here. Okay. Now, let's just take a look at the last year. We're at a yearly high. We're overbought. I'm not buying in Meta yet. Some things I like about Meta long term. Now, if I were to rank my stocks, I love NVIDIA, Amazon, Google, Microsoft the most. Apple, my wife uses an Apple phone, Apple products. I'm on a Mac right now. I do like their computers and their products. So I do consider investing in them. Now, I would rather have an Android. I know, Apple versus Android, right? Sue me. I do like Android phones a little bit more. My wife likes Apple for the simplicity of it for their phones, but it is a product I like enough and that I do use enough to say that, hey, I'm willing to invest in it long term when the conditions meet my plan. So again, your homework, guys, make a plan. Write down your plan. Write down what are 5 to 10 stocks you use. Like, look around. Do you have a Garmin watch? Do you have an Apple phone? Do you have a Microsoft product? Maybe, let's see, a Samsung TV. There's healthcare stocks. Again, you can diversify based on the industry or the sector. Write down 5 to 10 products you use and like, and look where their stock charts are at. If it's at yearly high, it's overbought. I'm saying, I'm going to tell you, I would be patient. Not financial advice. I would be patient. Wait for better opportunities to buy. Wait for the stock when it is at yearly lows, when it's oversold. Okay, we can go back further. Look at this. Oversold yearly low, great time to dollar cost average in. Okay, it went lower, yearly low, oversold. Maybe you wait for a confirmation of a buy signal, one of those indicators. Okay, let's put one of those on right now. UT bot alerts. But I like these indicators when they're on the weekly. So, oversold, buy signal on the weekly, okay? You can say, okay, maybe this is a yearly low, oversold, buy signal. Guys, you can simplify things for yourself. Okay, this wasn't a yearly low over here. You can zoom in. Okay, it was still relatively elevated. You could have been more patient. So sometimes you do have to watch out for those signals. When you get signals like this where it isn't at a yearly low, again, that might be one that you end up waiting a couple of years to reap the benefits of. So anyways, guys, I hope you enjoyed this video going over the stocks whose important earnings reports are coming out. I don't know if these earning reports are going to be great or not. Whether they are or aren't, I mean, the price of these stocks, sure, they might go higher. And if they do, okay, I'm not going to be buying for a while. Now, if the earning reports are bad, like it was for Tesla, we might start to get good opportunities for some of these stocks down the road and be able to track where their prices are going. So just spend 5-10 minutes once every 2 weeks looking at these stocks, checking those indicators, looking at the RSI. It can be that simple, guys, on top of it being a product you like and use. So going to close it out. None of this financial advice. This is just for entertainment, educational purposes only. I do use my knowledge, experience, certification in consulting, educating, teaching within the field of psychology. Hey, I do well with my investments because of that, and I'm trying to pass on some of that knowledge and experience to you guys so you can simplify investing for you and look for opportunities to maximize your value. So you are not chasing the hype and pumps and buying when things are at all-time highs. Okay, when there's fear in the markets. Right now, I showed you guys, we are at extreme green. Wait till we're at least under 50, for God's sakes. We're under 40 or 30. Wait till we're at fear. And then you can maximize your investment value potential. Because we never know what's going to happen. But if you make a plan, you can react instead of trying to predict and being sad if your predictions do or don't come true. Okay, happy if they do, sad if they don't. But instead, you can react to the extra time you spend in the market, to the conditions that meet your plan, and maximize your investment potential. I am really trying my best to simplify this, to simplify this for you guys so investing can be fun, easy, less stressful. Again, invest only what you're able to lose and not use. If this is money you might need in the next year or two for a child, for your house, for rent, then you need to put your money into that so you can survive, so you can afford the things that you need. But if this is money that you are absolutely 100% okay with not touching over the next 5 years, okay, then that would be a good time to put that money in when the conditions of the market meet your plan to increase your value potential. Hope you guys enjoyed the video. Have a great and wonderful weekend. Comment below if there's any stocks or cryptos or anything you would like for me to take a look at. Take care, everyone.